Welcome back to the Brent Bruce Daily. We have good news in the home loan interest rate world, and I need to make sure that we all are paying attention to what is going to happen tomorrow, a very big day. The Federal Reserve is going to make their announcement as to what they're going to do with the federal funds rate. Now, for those of you who have been watching, or maybe this is your first time watching this show, I need you to completely understand what's going to happen tomorrow. If you're in the real estate industry, if you're a real estate agent, tomorrow, the Federal Reserve is most likely going to increase the federal funds rate by 0.75%. Your clients are going to freak out and they're going to say, oh my gosh, home loan interest rates went up by another 0.75%. That is not the case. You need to make sure that you can either quickly respond to them or maybe even make a call today to some of your clients and say, I want you to understand that most likely the Federal Reserve is going to increase the federal funds rate by 0.75% tomorrow. That is not the home loan interest rate. That is the federal funds rate. The home loan interest rates are not controlled by the Federal Reserve. They can be influenced. But in this case, and most recently, when we have seen that when the Federal Reserve increases the federal funds rate, it actually brings home loan interest rates down. And why is that? Because home loan interest rates are based on what's called mortgage-backed securities, which are essentially bonds. Bonds do not like inflation. Inflation is the enemy of bonds. What do we have right now? We have hyperinflation going on in the United States of America. Well, really in the world. So the Federal Reserve is going to increase the federal funds rate to fight inflation and to try to bring the inflation rate down. By doing that, that actually benefits bonds, which is why home loan interest rates like that. And home loan interest rates, the last time that they raised the federal funds rate, which was, I believe, June 16th of this year, they raised it by 0.75%. And over the next 2 weeks, home loan interest rates improved, went down by almost 1 full percent. And those of you who watch this show daily know what I'm talking about. So make sure that you like, subscribe, and share to this channel so that you know what is going on. Tomorrow, the Federal Reserve is going to probably, like 90% chance, increase the federal funds rate by 0.75%. And we believe that home loan interest rates are going to improve because of that. So make sure that you disclose that and discuss that with your clients. Where are we right now? We, on our charts here, are showing we're about right here in this range, in between our floor of support and ceiling of resistance. We have broken above our 50-day moving average and our Fibonacci level here. We're going to be coming up on another Fibonacci level here shortly, and also would have to get all the way above this 100-day moving average to see some really significant improvements. Now, over here we are, June 16th, the last time the Federal Reserve increased the federal funds rate. We improved, our home loan interest rates improved for almost 2 weeks. This is an inverse chart. When the green numbers are going up, then that means home loan interest rates are going down. Red is bad, green is good. So up here, we were at about a 4.99% interest rate, if you remember in watching this show. Then we lost that rate, dropped back down. Home loan interest rates went up on us to probably about 5.5%. And now they've been drifting back in the positive direction here. We wanted to get up to this Fibonacci level that we bounced our head off of back when we were at 4.99. So where are we today on our home loan interest rates? Let's take a look at the Brent Bruce Daily scenario. Every day we run this scenario to see where we are on home loan interest rates. I'll explain briefly as to what changes have happened, why they've happened, and we're going to take a look at where home loan interest rates are with my company, my mortgage brokerage. This is not going to be the home loan interest rates that you see with most banks because our rates are lower, but this is where we are today, 4.99. All right. So a very well qualified conventional 30-year fixed mortgage today, as you see, this is the breakdown. This is the scenario that we're running. All right. If we run this scenario, which again was a very well qualified 800 FICO score 30-year fixed conventional loan, we're at a 4.99% with no points. Now, that doesn't mean I'm going to add on. This is with no origination points. This is with no lender fees. No brokerage fees, anything like that. So this is not, oh yeah, by the way, we're going to charge something else. That is not the case. This is really what we offer. 4.999 with a little bit of a rebate of $119. Okay. So if things go the way they did last time, and we get a full 1% reduction in home loan interest rates because of the move that the Federal Reserve makes, we could be in the threes a couple weeks from now. It's possible. I don't think we're going to go that far in that direction, but hopefully the aggressive moves that the Federal Reserve is making towards reducing inflation is going to be seen as a positive thing again, and home loan interest rates will benefit. Make sure that you are paying attention. You're subscribing to this channel, like this channel, and share this channel so that you also know what's going on a daily basis. 4.99% today, guys, and hopefully we're going to see it go even lower. We will check again tomorrow. I will let you know when I hear from the Federal Reserve. Have a great day.